Hi guys, so um what was it? I want to do a new backtesting session. I think this is gonna be the third one. Again, if you do want to see like the entire strategy system breakdown, you see it on the first video. So if you haven't watched that yet and you wanna, you know, get a little more in-depth detail or whatever on the system, just have a look at that. Um the next few videos, I don't think I'll be going over the system because it just takes so long. Like it takes, at least half an hour. And that's not even me going over all the different models that I'm using as well. But obviously, I'm trying the best I can. So this is just literally just using what do you call it? It's EuroCAD Monday, 5th of June, 2023. Euro CAD. 5th of June, 2023. Just a second. All right, so to go over just a quick rundown on what we're looking at. We understand that there's two delivery models. There's traditional pullbacks that come back into 50% of the Fibonacci retracement for continuation. And then we have type 2, as I like to call it, push, pause, continuation, pause, continuation. This is a pullback just as much as this is a pullback, right? As price comes back quite deep. The difference between them is one comes back into 50% of its current price leg, one stays within the premium or the top half. And if we're looking at the sell side, we're looking at price staying at the lower half of its sell range. What are the similarities between it? What's happening on the lower time from here? Lower time structure get broken, and then that being confirmed, and then continuing to the downside. Overall, it being a complex pullback because overall our narrative is bullish, and then looking at the next reference point, which is 50%, the next reference point, which is the Fibonacci retracement for a continuation. The similarity between that and this is the same thing, where lower time frame has broken structure, but the difference would be we regain control to the initial direction essentially straight away, right? 1 second, I'm eating at the same time. So in terms of theory, logic, and application, it's the same thing. Now, if then this is to fail, prices continue down, we then enter into a potential deeper pullback. It does not take away the fact that we're still overall bullish because we know when lower time breaks, we're within a larger, always within a larger A to B bullish range and a bearish range. And it's good for us because we go into it in just a second. So when we then see a continuation, we just call this, or we say two things. Sellers are being rewarded short term, or we're seeing a complex pullback into the next reference point. The next reference point could be 50%. And there's a few more reference points that I use. Very simple stuff, and we'll go into it in the back testing, right? So we know that if price keeps dropping down, momentum has shifted. So we don't want to aggressively get into buy position, but we understand that at any moment a price can push up. It doesn't have to come into 50%. It doesn't have to come into the Fibonacci retracement. So just be aware. So if you're in sell position, just be aware. Manage your trades accordingly. Manage it, systematically or whatever. Um, that's number one. And so the idea would be we're just constantly trying to follow and continue to trade in the overall prevailing trend or the overall current momentum at that current point in time. Problem is momentum changes from time to time frame. A good thing for us is our system is built upon a few things. Strictly trading session hours, that's a non-negotiable. We trade a 90-minute window within London session and New York session. Live trading only trade New York session. Another thing is we have to build a bullish narrative, a bearish narrative, a backup and a backup narrative for both, right? Reason being is you can be so strongly bullish or bearish on a pair, and then you have to answer the question: what happens if it goes completely against us? We may not be able to get involved on the opposing side, but at least if we have the understanding of price, The reason why this trade may fail, because again, every trade we enter has factors that negatively or will negatively impact the trade, i.e., hitting our stop loss. Could we at least have an understanding as to why that's happening based on just not even just logical, like the institution are doing this or that, or simply more so based on structure? Okay, structure is also against us on a particular high time frame. By doing so, it doesn't necessarily mean we're going to ping pong. We're going to try trading the sells into the buys, into the sells, into the buys. We're not doing that. It's just so more to have the understanding. So with the understanding, we can manage our trades accordingly, right? Or as best as we possibly can. That's the idea. So to show you guys, and I already showed it in the last video as well. I gave a proper breakdown in the last few videos. Just based on what we're seeing here, right? We see bearish intention. We're seeing major highs, major lows. Now, remember what I said, when we see breaks of structure, it doesn't necessarily mean we're going to go to the upside. If we do, that's one narrative. So we have a break of structure, i.e. means that we have a demand point here, right? But at the same time, we have to understand, again, supply and demand is not that simple. And that's what a lot of people don't realize. A lot of people mark out every single supply and demand zone and it gets taken out. They're like, what's even going on? Keep it as very simple as possible, but we have to apply as much logic and context as possible to it as well, right? So a simple approach is demand, just like once upon a time this was demand point. This just like once upon a time this was a demand point. But again, this was also demand point. This was also demand point. So many at the same time, but at the same time, there's you can identify few major ones, right? And its context behind it, and as to why it can hold, as to why it can fail. Again, you need a narrative and a backup narrative. So with price break structure, we're looking at this demand point. You have to ask you, what if in the rare occasion, because again, momentum was bullish, right? What if in the rare occasion price ends up taking us out? For what reason? Whether we get involved in the short or not is besides the point. We may not be able to get involved in the short. Again, because it's on the weak side, of course we are going to be able to, right? Because just a small movement, just a little movement here could pay off the entire month's salary essentially, right? But in terms of, let's just say this on a 50-minute time frame, why could price drop back down? Well, we have major high, major low. We know that on a high time frame, this is a push down. So any pullback up would just simply just be a pullback. And then we're just looking to find a point where we can play that continuation. Sometimes we just have to wait for the high to be placed in and then play continuations from that. Simple as that, right? And then obviously, if you look at this on a relative low time frame, which this would be a relative low time compared to a high time frame than this, it looks like a structure break. But we know structure breaks on a high time frame is just simply push downs, push up, continuation down. These high points, these structure points on a relatively high time frame would be, potentially previous candle highs and lows, price taking it out, essentially just maybe filling an imbalance or just coming into high prices. More so, this is just a push down, push up, continuation down. That's all it looks like, right? So applying the same logic, when we saw range, this gets taken. We're trying to justify why pricing was short. Now, if you see strong intention, we can be like, okay, buyers potentially being rewarded. We might see a complex pullback back into it. The next reference point, what's the next reference point? We have major highs, all within a larger ATP range. That's the main thing. Structure supports the idea of short overall, right? Now, that gets taken out or that gets taken out regardless. The main idea, that's one reference point. Another reference point would be the 50%. Another reference point would be the supply region. Another reference point would be the Fibonacci region. So many reference points showing that there's no real significance behind it. You'll never know exactly where price can come into, but you can use as confluence or as, to just add to your logic already. 50% is a region where sellers or participants love to enter from. Supply points from buy to sell, this buy to sell range is another region where sellers like to get involved. Now, if these were significant points, you would slap an order here, you slap an order here, you slap an order at the Fibonacci retracement, you slap an order at the 50%. We're not doing that. We're waiting for the reactions. So then what do we see here? So bearish side, we understand why the bearishness can come. We're coming out of the supply point. We should, based on simple order flow, we should simply continue to the downside. Now, what we see on the opposing side is we have this massive range with micro ranges, micro ranges, micro ranges, micro ranges, micro ranges gets taken out. Are we trying to go short now? No, because we're now focusing on from a buyer's perspective. From a bearish perspective, simple. Price come back up, break of structure, wait for a pullback, play the continuation. Very, very, very simple. From a buyer's perspective, what do we see? Larger ATV range, we see micro range holding this range just gets taken out. We're trying to justify what price can go long again because why? Because we know that we're within a larger range. Price can give us a deep pullback into 50%, the next reference point, the Fibonacci retracement, or price could again remember what I said at the beginning, push, pause, push. And what is that? It's price taking out fractal structure, then regaining control instantly. Again, because it's a weak side, it's not instantly, but it's a lot, you're not going to see that deep pullback. That's the first idea. And if price, because we saw the break here, 1 week, 2 week, third week, we end up dropping down. we assume that momentum has shifted bearish. When we can either get involved in the shorts, or if we're very, very eager to take buy positions, stay patient, wait, and buys may come to the market. But because we've already planned the secondary narrative, which is the short, we can play short-term continuation. And because the truth is, the market can end up flooding all the way to the downside. That's why it's really good to have both narratives figured out, right? Sorry about that. So we know, look, price coming into a major demand button here, but it's also taking a fractal structure, giving us a larger time from larger time frame type 2 or pause market within a bullish range. We could see continuations. But we can also see bearish continuations by, this supply point get mitigated, break of structure. So we have two narratives. So now it's about, okay, conflicting data, how do we maneuver around this? So now that's when we take each day by day, week by week, and see what the week and the day provides us. Now the idea after that is trying to establish where the low and the high points of the week will be placed in. If it's once it's been placed in, so if we're looking for a bullish week, we're looking for a weekly wick to the downside and then trying to play that candle expansion to the upside. Right, that's all we're doing. So let's see what happens, right? Major range. Momentum is bearish, so you don't want to go against momentum just yet. We know that this should hold. If it doesn't hold, it's all right. But again, we need to have a narrative as to why it doesn't hold. Why can't it hold? It could be either be extremely bearish or price is going to give us a complex pullback. We already see sellers being rewarded in this market, so price can come all the way down and then find this continuation. As of right now, it makes more sense to short than it is to buy this market until buying the evidence to buy makes or it is there basically. So from a weekly perspective, nothing really interesting in terms of its current weekly candles. Um, from a daily perspective, what we're seeing is pushes, pauses, pushes, pauses, pushes. But playing these on a daily time frame or on a week time frame is okay, right? Playing this on a 50-minute time frame is something I would never do. It's just, I'm gonna go into it. If the example comes, we'll go into it. If not, I'll make another video covering that. But what do we see here, right? Look, again, the idea, and then again, the next idea is we're trying to understand the different variation or different variations of the same price action just on different time frames, which means that regardless of the time frame we're looking at, we can still identify, we can still trade on that time frame. It just means our stop loss placement and our entry region won't be as precise. Sometimes it's better to not have it as precise, or sometimes it's better to have that little bit above it. Sometimes it's better to take it on a high time frame. Sometimes the high time is a lot more clear. So what do we see here, right? Look at what majority, look at what the majority have seen. Range highs, range highs, range highs. So printing new lows, printing new lows. And this gets taken out. They are looking to go bullish. Think about it in lifetime, right? They're looking to go bullish. Let's do something like this, right? Look. Let's mark that in white and do something like this. Just to show you guys. You've seen this break of structure, you see this demand point. Instantly you're looking, okay, I want to buy off this demand point. What happens? You get rewarded, you get rewarded, you get rewarded, and price goes up higher. Now participants in the market are like, look, this is an extreme bullish market. I want to buy this market. Are they wrong to do so? No, because evidence is suggesting that buyers can potentially have control and will continue to have control of this market. What does price do? We've got the next demand point. So we have the demand point number one. What color do we use? We used, I don't know, demand point number one. And then we got demand point number two. Again, demand is the very last, the start of the move. But then obviously we've got Fibonacci retracement. We have 50% or whatever. So let's just say we've got a few reference points. What does price do? This as a reference point, obviously we know that price tapped into here. So a lot of people looking at for a lot of people looking for a pullback. What happens? Price pulls back. Continuation. So the same thing, right? You're looking at the next demand point, right? Because you got minor range, and what ends up happening? Price reacts, and then it comes crashing down. Why did that happen? Wasn't the market completely bullish? What happened? You have to realize, go back all the way to the start. Go back a few weeks ago. This this was never meant to be a bullish break. This was never meant to be strong, real bullish intention. This breaker structure here was an indication, just like we see a large pullback. This was the start of a pullback. We don't know how far the pullback's going to come in. It could have stopped there and continued down. What's the idea behind it? Price coming into premium pricing, more expensive than previous selling regions. When we see the first breaker structure, we zoom out and we start to. So when we see a breaker structure, we try justifying why price can regain control is number one. Number two, to support that, we're trying to find structure to support that theory, right? So we've got a larger A to B range. So we're looking for a large push down, continuation, pullback continuation. The pullback can last, right? The pullback can be short-lived, or we can see a deep pullback. In that case, we identify that to be, or we call that a buyers being rewarded short-term / complex pullback. Eventually, after the next side, we get, at any point now we can see a continuation to the downside. So although bullish attention is being shown to us, we can get involved in buy positions, but be wary that these buy positions may not last. Trade it systematically. That's the main idea, right? Sorry about that. So that's the theory we use. Again, it could have been a case where price just gives you a simple pullback and then it continues. Price could have just continued from here. In this case, again, the different variation of it. And what does it look on high time? It just looks simple push down, continuation up. This leg might look like weekly candles, eventually we end up seeing a drop down. We establish the high and we drop down. Do we know when the high is going to be placed in? No. Because what's the difference between this high and this high and this high? There's not much, right? All we know is price coming deeper, deeper, deeper. The last thing you want to do is constantly trying to sell, and the price just ends up pushing up higher. There's ways to manage around that we'll go into in a further video. Anyways, let's delete this, and this is on a Friday. So again, it could be a case where actually we go into another video, and then we just see that continuation. And then what do we see? Just this just continues all to the downside. Now what do we see? Bearish intent, pause, bearish intent. Now within this entire leg, there's nothing showing us that we want to. There's nothing enticing us to get involved. We can't buy this market. We know that we're not going to buy this market. In terms of selling this market, you'd want to see this formation. Now this one I normally say, so on my journal it says, the very first line in my journal says something about if market condition isn't too clear, or again it's clear, but if market condition or there's no trading day given, let price action develop. With time comes more of an understanding, more of a region, more of a reason to enter or even stay out. As of right now, there's literally no reasons to enter. For me, all I would do is just let price action develop, because for me, this price is just going to keep dropping. That's the assumption. For me, there's no valid stop loss placement. For me, there's no valid entry regions, right? You have no microstructure to put our stops over, sorry. Obviously, a lot of people are looking at these micro again. The higher we are after giving us getting a deep pullback, yes, you can potentially enter stop loss above, because we can see intricate wise, you can see previous highs being protected. At a certain point, price is pushed down too far away from here. Again, there's no definitive region. It's more so from a comfortability standpoint. But this is the thing: people use comfortability and emotions against them, in the sense where they get emotional and they want to FOMO into a trade and they end up blowing their account. What I do is I use comfortability and emotions in my favor by using emotions as the sole reason to stop me from entering a trade. Yes, that skews with the risk reward, where technically you should take every trade as it comes, for as long as it follows your system. But at the same time, I'd rather not be in a trade if it's making me feel really uncomfortable than to be in a trade and I'm just sweating, and I'm just stressing being in that trade. I can't, manage my day correctly. I can't get on with my day without stressing and constantly looking at the charts. That's what I'd rather choose. But that's my own personal experience, and that's more so the way I've always liked to trade, and that's the way I'm going to stick to trading, right? So as of right now, all we know is we need to see a deep pull before continuation. So that's what we're looking for. Now, does price come up once and then come up higher and then come up higher? In that case, if we see bullish intention, we probably can trade that, just like we could trade this, but be very, very careful with it, right? But the main idea is to see continuation. So as of right now, let's try finding a micro range. And I wouldn't even classify this as anything. Yes, that can hold, and price can push down 100 pips, 200 pips from here. It's just not something I'm willing to take, because all it takes is one slight pullback and a strong continuation. I'm happy to wait for that. And if it doesn't come, fair enough, it doesn't come. There's nothing I can do about it. So we got this micro range here, we got this major range here. So, and if I want to get into an entry, I want my stops as close to these highs as possible. I know that I won't be able to get my stops as close to these highs as possible. So it's either just wait for price coming to 50% or something. Just build up some sort of structure, let price develop, build up some sort of structure, take that structure out, and then it could potentially get involved, right? High of the day, next high of the day, protecting previous highs of the day, and playing that continuation just like we saw all throughout, right? Like look at something like this. When I enter here, let price action develop, price prints a high, takes out the high. Within session, my session has developed, my session starts here. Push continuation, push pullback continuation. That's what I'm looking for. So again, we just refer back to what we already know happens. Again, it's not gonna happen exactly like this, but the theory and the logic stays the same. Hence why we can trade the markets regardless of how big the pullback is and whatnot. So as of right now, I'm not looking to trade anything. I'm waiting for London session and then New York session. I'm looking at timing here. So what do we see? Pre-London session, prices pullback, fractal break. First signs of pullback. Again, nothing that entices me, and we've seen a continuation. Could this end up holding and we see continuations? Possibly. If you then see a build up here, could we potentially get involved? Yes, but we have to be very careful because at any moment price can flip up higher. High risk positions because we are at very low pricing, no valid stop loss regions. If you do take this trade, I don't mind taking high risk trades when I'm around the break even mark, when I'm up, when I'm down 1 or 2%. But after that, I don't necessarily want to get into high risk positions. It's just something that's just the way I function and the way I trade, right? So let's play price. Again, nothing entices me here. Again, you can enter this right into some macro range, but just know that if price takes you out, you can short here. Just know that for myself, it's more likely that price will give us a deep pullback, or I'd rather just wait for a deep pullback, wait overnight, wait the next day, the next week, right? In terms of the week candle, daily candle, nothing like nothing here. Just like that, look, price takes out these highs. Did we know price can take out these highs? We had an inkling that price could, but for the majority, they're looking at the supply. They're looking at the supply region. They're looking at the supply region. So let's see what happens from here. We've got a New York session starting very soon. So next, we've seen a quite strong intention. So we've seen, not seeing that, we've seen more so high being placed in, high being taken. So that happens Wednesday, Thursday. Usually I want it to happen across a few days. Happening on the same day, I don't necessarily like it. More so because if there's a high being placed in, assume that that's one daily high. The next day comes in, protects previous day, so I can get my stop loss above here. At this point, we've not really established the high point of the day, right? Let's see what happens. Let's the session come in. New York session has started. Price pushes up higher. Exactly, just by waiting, we get much better entries. So what's this? What's this? So look, we're seeing a deep pullback now. We're seeing a deep pullback. Now we can potentially look to enter somewhere around these regions, right? Now, something I like to do is if there's no entry that's being presented at 1:30, I could then look at 2 p.m., which is a new 4-hour candle open. Assumption is price is printed in a bullish candle. As price starts to flip bearish, we leave a wick behind and we want to get involved in that wick. But again, because we're so low down and because we're seeing the first signs of a pullback, does this pullback stop here and continue? Do we see a deep pullback before continuation? We don't know right now. So can't take anything. Let's continue to play price. So it works just how the theory that the idea that we had is working out. We've seen push up, wick, continuation down. Again, none of these bullish reactions mean anything to us from a buyer's perspective. Current momentum is bearish. We're going to focus on the bearish momentum until bullish evidence is given, right? If we see a build up and a holding of lows, potentially get involved. Other right now, nothing that interests me. Then we're outside of session, so move on to the next day. Again, now I don't care if price can take this point. I don't care if price can hold this point because I mean outside of session, it doesn't matter to me, right? We have London session is going to start in a minute's time. All right, look here. How many traders do you think are going to look at this point and try buying this market after this break of structure? Plenty of traders. What we understand is overall we're long. We're short. We've seen a decent pullback, taking a fractal structure within a large ATB range. We know that on a high time, it's just a push, pause, push. And the idea is to follow the trading trend, follow momentum, right? So could it just be a case where highs been placed in? We're looking for further continuation to the downside. Now, because now price can pause, continue, just like it's pause, continue, pause, continue, pause, continue. At the same time, we're at a demand point. Do we know for sure, or do we have more conviction on one side or the other as to what could happen? Because again, we can see a deep pullback. For that reason, conflicting data, we want to stay out. On top of that, what we add to that is we say a New York session is about to start. Learning session is about to start. We've got a New York session in the next 5, 6 hours. New York session can offer us, we can get higher, 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 and then take this trade. So for me to take a sell here, I wouldn't take it. I'd rather take it at higher prices if we're offered higher prices. If not, price drops down. Okay, the sacrifice I'm willing to take. That's sacrifice I'm willing to take. So let's just wait for New York session. Again, this is what I would like trading London session. A lot of conflicting data. So let's see what happens. And price takes that point out. So let's continue to play price. See what happens in London session, New York session, sorry. So we have major range, mark range. Session's about to open. Can we take this trade? Potentially, but where's our stop loss going to have to be? Close to these highs as possible. For that reason, because we're so low down, I'd rather not take this entry, right? Stop loss space, we won't get a valid stop loss space, but at the same time, we can easily just shift bullish and, we get wiped out of these trades. So I'd rather just wait for better and better pricing. Again, there's instances where I take this trade. It follows my trade. It's just very high risk. I won't take it. And again, like I said, I would take high risk from out break even, but the fact that it's clearly these highs are the valid highs. We're so low, and just again using context behind it. This way, comfortability and emotions come in and say, look, I'd rather stay out of this trade because it makes me feel uncomfortable. Simple as that. And again, I think that comes with experience. There's a lot. Majority of my strategy, you can follow it to the T, but when it comes to like the emotional aspect and the experience and the intuition, that's something you just have to potentially learn. And what happens? Look, it works out. But in terms of stop loss placement, my stop loss placement would have been here. If that gets taken out, price will drop. The idea is still valid. It's just my stop loss place was in such a high risk place to get stopped out. Outside of session, move on to the next set. And again, with conditions like this, when prices just pushing and just pushing and just pushing, sometimes you might go days or weeks without an entry. There's nothing you can do about it. Move on to the next day. Let's see what the next day has to provide. London session, absolutely nothing. New York session going to come very soon. So what do you see? Okay, this gets a little more interesting, right? We're seeing A to B, fractal structure. Do we enter here? No. Fractal structure, do we enter here? No, because outside of session, we still got another 15 minutes. Let's see how high price can bring us in the next half an hour. We're up here. Would you like to take an entry here? 30 pip stop loss covers us a little higher. We still got a little higher entry. You have to ask yourself, are you okay with taking an entry like this? Again, we're quite low down. This range can end up holding. Let's see what this looks like on a daily. Let's see what it looks like on a week on the daily time frame. Previous day highs. Are we potentially protecting previous day highs and just going to continue like we've been doing for the last few weeks? If that is the case, we want our stop loss as close to these highs as possible. Let's just drag that down. If we, it's not really close to these highs, but we can, it's a valid trade for us to take. So let's take that. Market order. Stop loss, optimal stop loss. If you want to know more about the optimal stop loss, just watch the first video. I went over it in detail. Oh, I didn't move my take profit. What the hell? Idea was the take profit was supposed to be a 1 to 2. Do we end up hitting a 1 to 2 either way? We end up hitting a 1 to 2, so that should have been a 1 to 2 trade. Perfect trade, perfect analysis, perfect execution. Let's continue to ride this. And again, like I said, it doesn't necessarily matter now because trading at such low prices at any moment we can see a deep pullback, or price can just keep continuing. We don't know, so we'd rather lock in 2%, 2%, 2%. And in this case, we're locked at 1.5%, which is unfortunate. But like I said at the beginning, we're just trying to cap our TPs as quick as possible. Move on to the next day. So we've got London session. Very low prices. This is a massive pause market. And again, price could pause, continue. Again, something that I'm not comfortable with. I'd rather wait for a deeper pullback. Eventually you get that entry. Eventually you might get an entry within here. I'm not comfortable. And again, from a comfortability standpoint, from a risk standpoint as well, I know these to be high risk. I'd rather just wait for high pullback, a deep pullback, right? Especially this being a 50-minute or 50-minute 1 hour type two, it doesn't necessarily mean much. So what happens? Okay, just by waiting, price goes up higher. Let's see if we can get higher, higher. So then New York session is about to start. So what do we see? We got major highs, major highs. Price is trading at major high. So let's just wait for the next 15 minutes. There we go. So we up to, you know, the highest point at session open. So price already pushed up quite a bit. Seen a deep pullback. Session opens right here at a supply point. We can enter this trade. 30 pip stop loss. Gives us more than enough buffer. Not only above here, it gives a bit more buffer. So if in the case price takes this point out, we can still be bearish, but the likelihood of price taking this point out and taking us out is quite high. But we've got enough buffer from the entry to, you know, our structural point. Now this would be something that I'm willing to take. Market execution, stop loss, you know, take profit at the lows for long as 1 to 2. Perfect. And again, if price takes this point out, we're good to go short once again. Price takes this point out, we open up a bullish range. Could we continue? You know, that's something to come, you know, if that happens. But as of right now, we're in, you know, it's a decent short position. What day is it? It's Thursday. Price takes us out, fair enough. Right? So that's the trade of the day. We can just continue to pay price. But now this sets us up quite nicely because what's happening? Look, break, break. What do a lot of people see? They want to buy this market. They're not wrong to potentially buy this market. And if you see evidence as price comes lower to buy this market and around session time and whatnot, potentially get involved. But our first instincts are, again, first instance is the assumption is we've seen a break of structure within a large ATV range. So actually this is just fractal break, price coming into discounted or deeper premium pricing because it's a sell region, it's a selling region. We're looking for continuation to take out these lows. Let's see if we can get involved, right? Again, we're going to play on the 1 hour time frame because session has come to an end. Play price. London session is about to start. So now what's happening? London session is starting. Price has, you know, as much as we're bearish in this market, we can't take away the fact that this is what you can never, you know, disregard the fact that if in the case price reacts at demand or the 50% or, you know, beneath fractal structure, price can continue going higher. Is that our first assumption? No. Is that the first idea that we want to play? Nope. We can focus on the sell side until evidence is given to us, right? And again, the fact that it's London session can either bring us up into here for New York session. London session can was it take us out completely. So it's like because we've got so many hours till New York session and anything can happen. That's why I don't like playing London session. But again, I always reiterate it. But the idea is we can go bearish, we can go bullish from here. Conflicting data, like one of the first trade ideas that we're looking at. Conflicting data, we don't want to take this trade. Wait for New York session. There we go. So New York session, it's not New York session just yet. We've got another 30 minutes. There we go. So New York session has started. We have to ask ourselves now. Shit, nope. What we see, look. Highs been printed in above fractal structure, above fractal structure. We're all for bearish in this market. We've seen bearish intention, price come back into supply. We've seen a reaction. Now, the thing with this is we've seen a reaction. Price has traded off now. If we take an entry here, stop loss, stay with stop loss, we're not getting enough coverage. So what we want to see is price either cover these sides or cover these sides. But in this case, we're expecting the next 15-minute candles to come. Seen a respect of these sides. We've seen it again. It can get taken out, but because of our 30 stop loss, you know, we won't be able to get into an entry unless price revisits this area. If in that case we're looking for price to hold demand, come back up higher, we'd rather have an entry up here. But if the idea is we may see this high getting respected, we may see this high getting respected, in that case, I'd want an entry, and this is the only time I would ever give myself a higher entry from the point where session is starting is when my stop loss, either I'm not comfortable with it or my stop loss placement doesn't cover a valid region. This is a valid region, this is a valid region. For me to take it any higher than that, it's me more so looking for demand to hold, price come in, and then continue down. So we test it out, we see if price can tap us in at that 30 pip stop loss at these size, so it'll be, you know, around about 30 pip stop loss. And then a 1 to 2 is our default. And obviously we're going to stretch it to the lows as much as possible, of course. Just based on momentum. I'm placing a limit. I'm placing a limit order. One to two. Tapped in. See a continuation. Nice. So let's see how far down price moves. So what we can do is we can stretch this to the downside. Because if this is going to move, we're looking for at least a 1 to 2. Session comes to an end very soon. Now, we have to ask ourselves, look, bullish range, fractal break, price could have gone higher, price respects that and continues down. Fractal break, break of structure to the downside, fractal break, price coming down lower, could price regain control to the upside? Again, because we are playing at very low prices, something to be a bit skeptical about. The fact that we're not in the best or the best entries, we have two decisions. We've got a decision to make. Do we keep it open? Price can be mitigate out of it and then continue down, or do we go to break even with the idea that look, we're not in the best entry, price tags us out, maybe tomorrow we get a better entry, better risk reward, or whatnot. Or can be like, okay, if price can get to a 1 to 2 before that, we might look to close out the trade. We might look to go to break even or something. Because I'd rather at least take a one. I'd rather at least take a break even if I'm floating 1 to 2 in a position where it can go, both ways. Or I can just be look. These are the emotions that you have to go through. Or these are the different ideas you have to go through. Or I'm gonna look, wait for the reaction. If it's a strong reaction, we're gonna close it. Or if we're seeing a sharp reaction back into it, we'll just close out break even. Let's see what happens. The fact that we're outside of session as well. So this is Sunday, so just go to break even. Best case scenario, or worst case scenario, we get a break even. Best case scenario is we have range, price either drops down, or because it's a new week, and if we're bearish on this market, price could print in high points, take out fractal structure, and then continue down. Likelihood price of the likelihood of price taking out hitting us at break even is quite high. Something just to be aware of, right? So let's see. Outside of session, just place on 1 hour time. Let's see what happens. So again, what's happening here, right? Session's about to open. What do we see? Large push, massive type 2, which is price pausing. We're taking a fractal structure, so we can end up seeing a continuation. Now, would I play that? No. Would I play this on New York session? Possibly. I wouldn't play this because price has reason to come up higher because we've got a few more hours in New York session and then drop down. So for that reason, I'm not going to get involved. But let's just see, let's just see what happens. Price comes higher. We might end up hitting a break even. We end up hitting a break even. Fair enough. Clear that. Clear all the drawings for now. Again, we can't take with the fact that look, could this be price holding bullish flow and it's going to head to the upside? Let's see how New York session starts. Again, conflicting data would be price at the supply. This could end up holding, push to the downside. Should just have to be careful. Let's see within this bullish range. Let's see if price is at a premium or a discount relative to this bullish range at New York session. New session is about to start. Session is about to start. So now we have to ask, right? We have price coming into this supply point. Supply point prevailing trend is bearish. We have price reacting out of the low half of this range, bullish price action, taking out fractal structure within a larger ATB range. Seeing a slow creep up, price can hold the supply or price can go higher. Conflicting data, we just stay out. Let's have a look at what this looks like on a daily time frame. So this is Monday. So Monday opened up Monday protecting previous day's low, but also we can also easily just protect previous day's high. Currently protecting each 4-hour low point. So I think in this case, if it's a case where if we're supposed to hold this 4-hour, if price comes down, we see a bullishness come back into the market, I'll probably enter market execution like this. So let's see what happens. Okay, from here, if we then see a bullish continuation, and again, I can't see this in live time. So this is how I would play it, 30 pip stop loss. So not only gives me a buffer beneath it, if price comes lower, we're good to take this. Let's see how this plays out. How do you do this? So usually in terms of, what do you call it? In terms of live market, what I would do is just wait for this candle to flip. But because we can't wait for this candle to flip, if it flips and it just smashes the upside, we miss out on the entry. So I've got buy stop here. Let's see how that plays out. Okay. So again, price can react out the supply. We can't move to break even just yet. Price can easily just hold this, hold this, hold this, and continue to the upside. We're outside of session as well, so let's see what happens. Move on to the next day. Not move on to the next day, but go to the high time frame. Let's see what happens. So we've taken out, or just about taken out this supply point. I think now worst case scenario, or what we think about is we're looking at bullishness because the idea is we're still bearish. If price takes at this point, we're still bearish. Could just be a case where we're seeing buyers being rewarded. Complex pullback within a large ATB range. So once price takes at this point, we can test out the short again. It's familiar. It looks the same as this, right? Tried shorting, price comes high, tried shorting. Whether it happens on the second time or third time or the fourth time, we play systematically. But as of right now, we're seeing bullish intent. In terms of, yeah, if that then fails, we have major low, major high, major low. After taking out fractal structure, this high value region. Fractal structure on a high time, just push down, push up, look for that continuation. So that's a possibility and that could happen. It's just something to pay attention to, if especially during session price is reacting bearishly, could be a good sign to go to break even. Let's see what happens. We're still outside of session. Ooh, okay, session's about to start. Okay, we hit take profit, perfect. So up 2.5%. How many days have we traded? We started on here 9 days in, we're up 2.5%. We're basically over 3%, so we basically made the entire month's salary already. Now from this point, a lot of people disregard the fact that we're overall bearish. So what they're going to be doing, they're going to look at demand point and they'll be looking to aggressively buy. Our main idea and our main conviction is to the downside. And again, if we get proven otherwise, and we see bullish build up pre-session and a build up coming into session, then we can potentially take buy positions. But as of right now, you want to focus on the sells. Now, would we take sells here? If it was New York session, I probably would have. But again, we don't know when this pullback's going to stop. Momentum has shifted bearish, so we're going to be a bit careful on the sells. However, what also supports is this London session. We have a few more hours. New York session can bring us up higher, and then we can short this market. So let's just wait. Let's just wait for that. So we've seen bearishness kick into the market. What the hell is that? So we've seen micro range, micro range, micro range, micro range, micro range gets taken out. Is that just giving us a deep pullback now before continuation? Possibly, right? Or it could just be a thing where supplies come in. This is Tuesday's high points of the week. Could we hold that and then continue? Also possible. So let's wait for the next half an hour. So we're seeing continuation. So could this be the same idea as we played for this trade, right? For as long as price doesn't take out these lows, we are good to take this. The stop loss covers this right here, right? And why not taking an entry here? Because our stop loss wouldn't cover these highs. So just moving up slightly so we can get a stop loss here. This exact same step as this. For as long as price doesn't take out these lows first. If price takes out these lows, intentions can change because we're coming into session. Oh, session hasn't even started yet. Let's just wait for the next session. Okay. The reason I'm doing that is because it's not 130. So as it comes to 130, now we can take an entry here. Stop loss, we have more than enough buffer. Market execution. This is the same exact setup as this. Yeah, same exact setup. So let's see how far down price can go. Again, the idea would be to stretch all this downside. We want at least a 1 to 2 from this trade. Only because we're seeing a bullish buildup, but we don't know exactly when the market's gonna flip price. So let's see what happens. Nice. Strong intent. Move that to break even. The likelihood of now price coming back all the way up and respecting continuing down. But again, it becomes high risk because we're within a larger ATB range that's been proven to take out highs. We don't know exactly when this market's going to flip bearish. And we want to protect the position whilst also knowing we're in a good entry, started at the beginning of session, taking out fractal structure, just coming into more of a discount portion. Sorry about that. Had no file space left. Anyways, hopefully this continues. So yeah, as we were saying, yeah, so large ATB range. We've seen evidence of price pushing up high. We don't know exactly when the pullback's going to stop. We don't know if the pullback's we don't even know if this is if this has shifted bullish, right? So for that reason, when play quick, a bit smart, right? We're still within session and price has every reason to push down lower. The new 4 p.m., the new 2 p.m. forward candle has opened, so we could wick down before picking up higher. So it's better that we keep our trade at break even and just let price play out. Let's see what happens. Session is now closed. As we come back into, so we came into the entire demand region. Again, this is why I don't mark at demand points, because the demand is its entire region. We're just refining it, but the refining is not always accurate. So price coming back into this point just to visualize it. So price come back into this demand point, come back into this demand point. Do we close out a trade? We're looking to potentially run to these lows for 4%, or we could be look. This trade is nearly at 2%. We close out this trade at 2%. If evidence suggests that we're going to continue to ride down lower tomorrow, it doesn't hurt us to tomorrow to get involved again tomorrow. Possibility, right? Again, we react based on what we are given. So price hit our take profit outside of session, so we don't not gonna trade anything here. Wait for the next day. Let's see what happens. Came very close to our take profit. Okay, we hit our take profit, so we're up 4.5%. Smashed it. We did really good for the month so far. We're only halfway through the month, right? So the idea, we obviously don't need to mark this down. Let's mark this down. Let's get rid of some of these drawings. So what we're seeing is fractal break, fractal break. Now, this could be a push down, pause, further continuation. Do I get involved in that? No. Like I say, I never get involved in type 2 models within on the 50-minute time frame. It doesn't make sense, because the idea would be I'd rather just wait for high prices for continuation. So I'd rather than just wait for price to come up higher and then continue down. But one thing we can't take away the fact is, or the fact that we can't take away is we've seen bullish price delivery. This could be the start, but this could have also been the start. But we've seen bullish intensity. We've seen bullish intensity. So we want to play. We want to play based on what we're seeing, not based on what we think or want to happen at this moment. As of right now, prices at this demand point could see a strong continuation. Let's see what this looks like on the daily time frame. Day has opened. We're currently printing low points of the day. That's telling me, so what day is this as well? This is Wednesday. The week should see a bearish continue. We see, like on the weekly time frame, we've seen price come into the imbalance. You know, nice pullback. Look for that continuation. So that's what I'm seeing on the weekly time frame. On the daily time frame, I'm seeing, we've seen the bullish flow, protection of that daily, protection of the daily. We're seeing the daily open pre-session price come lower beneath previous day's low. That doesn't signify any bearish confirmations. That's just telling us that, look, we've seen deeper discount price. We've seen deeper discount pricing being offered to us at session open at discount portion. Could we potentially get involved in this trade following on this bullish intent, right? And what do we see? Look, A to B, fractal structure from up there. Further fractal structure pre-session. Did we enter buys here? No. Did we enter buys here? No. Did we enter buys here? Not just yet. But what makes this potential point now different to these points? This is within session, and it follows everything that we just said, right? So again, it's both sells and buys make the same amount of sense. For me to take one or the other, I'm quite neutral. I don't have conviction on one side more than the other. I'm neutral in both, from both sides, right? But what I do know is I don't want to sell, just like I said here, just like I said here. I don't want to sell this market knowing that price could pull back. So I have three choices. I either stay out, buy or sell. Would I sell this market? No. I'd rather sell at high prices. If this range is to hold, right, I'd rather sell at high prices. So it's either I stay out or buy. I could stay out, or I could buy if I could buy this market in the next 15 minutes. So let's just see. With the next 15-minute candle right here. So if I could buy this market, stop loss stay pips comes under here. I know that short term I would want to see price come up high anyway. So I already have the idea to see even a short term pullback, just a short term bullish pullback. At the same time, I could also see a push to the upside. So I have two reasons to suggest seeing higher prices. If we're just going to come run here and then continue down, and New York session starts around here, either get involved in sells, hedge my bets, so buy position, sell position, or I just take a break even, get too quick. So just because I understand what's happening on the sell side, even if I don't get involved in sell, so what it allows me to do is go to break even or get to break even as price, reaches this high. So it's at least giving me a form of management. Take a trade here, essentially gonna open any moment now. 30 stop loss is down here. Good thing about this is now we got a buffer beneath here, we've got buffer beneath this. So if in the case price comes down lower, you know, and if it does, and if price just comes all the way down and continues down, take a stop loss, maybe in to take out these lows now, and this was valid. And remember what I said? Took a stop loss, we were a bit concerned as to what may happen here. Tried buying, okay, it was shown otherwise. Now just wait for further continuation, take this. You know, we got the next narrative plan. If this one fails, we got the next narrative, next trade idea plan that we can take maybe New York session or maybe in maybe the next day, right? If this works out, we can target this for 3%. That's a nice return on that. So let's see what happens. So idea is these minor ranges can end up holding. I'm not willing to take that. So I'd either have to see that happen or price just leaves without me, and that's the sacrifice I'm making. I can't really go to break even just yet. So session. Okay, we've taken out the highs. Now we are in for, could be in for a short continuation. Again, can't go to break even. It's just, that's just me just tightening up. Oh, cool. That's nice. So where does session start? So at this point, I can go to break even. Why? Because we've taken out these highs now. If in the case this larger ATP range holds, we could see a continuation. We're seeing strong initiation to the upside. So it's either we can either scale in, or what is on a scale in because fractal break, this could work out. So I don't want to add risk to a trade idea that I'm more neutral in instead of being convicted and or enticed on the sell side, if that makes sense. So it's just, let's just leave this open. Strong intention. New York session hasn't started yet. New York session is going to start now. At this supply, we could potentially take this, whereby, 1 second, whereby if, so let's take this and I'll show you what we'll do, right? I want to take this sell trade if I wasn't in this buy trade, but I'm just giving you an example as to what I meant by hedging, right? Overall, this can work, all right? A to B fractal structure session starts up here at session open. We could see a continuation down, but we're also in buy position. So now if this sell position fails, I take 1%, but then I also take 3% from this buy position, right? So let's enter this position. Let's see if this works out. Market execution, let's see. Session ends in now. So let's see what happens from here. And we get taken out and we end taking a stop loss with entity take profit on the buy trade. So that gets cancelled now. Again, we're at the highs. Look for the same formation, look for the same formation. Let's see if price is going to continue now, right? End of session, sorry. So we're going to move on to the next session. So a lot of people will be looking at the sells here. We're not looking to sell here because they're outside of session. A lot of people looking to sell here, outside of session, so we're not looking to sell. So what do we see? We see it's a bit choppy for us. What we see, we're seeing range low, micro range, micro range, micro range. Price respecting this. Could we just see a further continuation? That's a possibility. We also, because we're in London session will bring us down lower and then give us better entries based on this bullish A to B range, and that looks quite clear to us as well. What days is Thursday as well? Or we just bring up come higher. New York City just gives us better entry regions, right? So we either sell from here or sell from here, or the market just continues to buy and But let's just see again. One thing that I don't know if I mentioned in this recording, where one thing in my journal is if price action isn't too clear, or if you have no conviction, let price action develop. With time comes, a better understanding. So let's just wait. Let's play price. Again, we're not going to trade this because it's outside of session. So we're not trading this supply zone. We're not trading above here just yet. It's outside of session. Again, we're not trading any of this outside of session. Not trading this, it's outside of session. Now this is something that we could potentially trade. Now think about it, look. If we buy this market, where would we want to buy from? At least this market demand point. Whereby if we enter here, we want to stop loss down here. So again, buys off the card. Either stay out or sell this market. Why could we sell this market, right? It's the same thing we're looking at here is the same thing we're looking at here. Just in this case, we're not playing at a direct range, right? We're just playing above fractal structure, and then session. Hence why we want to look at this, not this, not this, not this, because these are outside of session. So the same thing we're playing, the same reason here is the same reason we had here. The only difference is this was within an actual range. This was not within a range, so it's high risk, but we have profits to cover that risk, right? These are times I'm happy to play high risk trades, right? 30 stop loss. Obviously, the only problem with this is okay. Let's pay the next 50-minute candle. Sorry, there we go. So next 50-minute candle, get even better entry just while waiting for session. 30 stop loss. Again, optimize stop loss. If you want to know more about it, go to the first video. But the idea is we're looking to see price run all the way down. Again, we're not going to hold for the full 6%. Or we may not need to, like, 5% is where I want to kind of, unless I'm in deep drawdown, when I'm in deep drawdown, I make two decisions. I make a decision. I either take 2%, 2%, 2%, or I cap my trades around the 5% mark. Or not 5% mark. I cap my trades around the 5% mark, or I just let the trade run and run and run. On a usual trade, 5% mark is where I feel a bit comfortable. So let's see what happens here. Ride this all the way to the downside for a potential 7%. Beautiful reaction. Let's see if that sustains. So remember, we're coming into this demand point. Be very careful. Outside of session, there's nothing we can do now. Let's play price. The idea would be, again, we didn't put a stop loss above here because this is not invalidation, but price can come up all the way up here. Even if it takes out a stop loss, it's not the idea of the sales coming in. It can still happen. It's just an optimal stop loss, which already explained what an optimal stop loss is. If price takes this point out, it can still go short. Let's just see what happens. Play into the next day. Lending session is about to start. For lending session, what do we see? We're just seeing price hold. Do we get involved? No, I'd rather see a deep pullback. And because we have New York session in the next few hours, price could potentially give us low price before buying. So for the New York session, I don't want to buy just yet. Would I sell this market? No, because we're within bullish flow. Price could just easily take out this point. All right, so I don't want to sell. Again, I don't have any valid, like extremely valid stop loss placements. Play price into New York session, so come and take out these highs. But again, I'm not doing it just yet because this is not, it's outside of my session, sorry. Session's about to start. So now what do we see? Let's see what's the daily time frame. So daily time frame, we're seeing deep pullback back into the 50% of this major range here. The idea is to eventually see short continuations. Price taking up previous days highs. On the week time frame, current week size. Again, this week can stretch. But based on what we're seeing on the lower time frame, breach above, initiation to the downside, pull back up, session starting here. We could potentially take this entry here. Stop loss, would it be here? If that's the current week side, we want to take this, but we want to enter with a 30 pip stop loss. So 30 pip stop loss gives us coverage of these sides a bit, but I would prefer a bit more buffer. Again, it's not within our control, so we take this entry, ride this to the downside, mark execution. This stop loss could go to these sides. So technically, one of the trades is basically very close to break even. One trade's open, so we got probably about 1.2, 1.3% open, which is perfect, right? Session about to open. Let's see what happens. Strong initiation from here now. Break structure, A to B. Price can react and head to the upside. So around the 5% mark, I'll close out half position, only because we're in two positions, right? Actually, so what am I doing? Really nice continuation. What does that look like on the daily time frame? Caught the highest point of the day, potentially high points of the week. Now this is where we have to be very careful because again, large ATB ranges, fractal structure, so we can have a reason to go bullish now. If price continues to go bearish, we look at the next reference point, which is this major structure, or it could be the 50%, which is I think lines up around here anyways. So we could look to close out. It doesn't harm us to close out 2%. So we're locking in 50% of both positions. So we're locking 2%. We've got another 2% float in. Let's see what happens from here. These trades, at least one of them get to break even. Other ones are reduced. I don't want to move that to break. I don't want to move this to break even just yet. So let's continue to play price. Play into the next day. Let's see. Actually, wait, leave that open. So London session is open. What do we see? Now the difference between this and this, what we see, look, bullish push, fractal break, fractal break, immediate structure, break. London session starts here, London session starts here. Why am I not going to enter here? Because if I enter here, where's my stop loss going to be? It's not in a protected place. The difference with this one was my stop loss was in a protected place. So in that case, I'd rather than just wait for New York session, wait for New York session to give me high prices to potentially play something like that, or new. That's Friday. This is Monday. So what does this look like? Prince high points of the week, high points of the day. So potentially these high points of the days, this is the high point of the day. They might get protected. High points of the week, and we see continuation. Um, what do you call it? Fractal base price going into further discount pricing. I have to wait for New York session to give us lower prices before playing possible continuations. Let's see what happens here. So play price into New York session. London session is about to open. So we see, so it's up to us now. We can either play buys with the idea that look, potentially price could head to the upside. What we can do is move the trades to break even. I can't remember the trade to break even, but if price comes here, I'll just close out break even. And I can hedge my risk again and say, look, again, the reason why I'd rather play this position than to play a London session, even though London session was in the same region, London session had its time to push down all the way. New York session started. If the narrative's going to be bullish, price doesn't have much time and room to push down before pushing up higher. Plus, I can use my optimal stop loss perfectly for London session. Target these highs for 1, 2, 3, which is really nice. Mark execution. Let's see what happens. Now we see structure price can come crashing down, or price gives us high prices back up into here. Around this region, we can potentially move to break even because the likelihood is price may come crashing back down. So we'll see what happens. Move on to our time frame. So move this to break even. Session's about to start very soon. Next 15-minute candle. So idea is potential price to take out these highs. So this trade close this trade out. The top trade can be left open. The idea would be, what's the idea? The idea is A to B, pullback continuation. Now, in like we said in this case, right? Worst case scenario, if this high is to maintain, we see break of structure, potentially get involved in a hedge position. So we're in positions here. We could potentially get into, again, this could hold, but I think this is just going to get taken out. So major high, major low. If this gets taken out, we assume this to be one push down, one push up, and then a continuation. If that's the case, we could potentially get involved just like we got involved here. Very high risk, but we got the equity and we got the profits locked in for us to play that trade, right? 1 hour time frame, what does it look like? It looks like a simple continuation to the upside. Like was on the 4 hour daily time frame, same exact thing. Breach beneath, holding previous day's low, bullish continuation on the weekly time frame. What does it look like? Printed weekly lows, look for that expansion. So everything's calling everything's calling for us to trade into the buys, trade into these highs, right? Pay price, and again, I'm not taking any London session trades. Same explanation. New session will start in half an hour. So what do we see? We see range. Could this end up holding? Let's see. Price takes out. So did we buy the market? Did we buy this market? And no, we didn't. Right, a lot of people would be buying this market. We don't do it because it's outside of session. So what is session doing now, right? Taking a fractal structure doesn't really mean anything. So we've got larger A2 range, fractal structure session starting here. We could potentially take this with 30 pip stop loss, covers these lows, perfect. Target these highs once again. So it's some potential 5% trade if we can get into the highs. Now here's the problem, right? Fractal structure, could this supply end up holding? Within session, we can end up pushing down. So but at the same time we have the idea of larger point A to point B. Fact structure price comes down lower, we can still respect and head to the upside. So I can't really manage this trade accordingly. I can't really manage this trade. So management is, nothing I can really do about this trade. So let's see what happens. We are outside of session. Let's place on 1 hour time frame. Let's see what happens. First raise that break even anyways. Let's got learning session that's come in. Idea is take out these highs. So let's see what happens. Looks like it's about to start. So we're seeing here, we're seeing fractal break, we're seeing supply we're seeing supply looking like it's somewhat holding, but at the same time we can assume that this is a larger ATB range, fractal break. We have conflicting data. We can either head to the upside based on A to B, fractal break, session starts at a discount, head to the upside. But we also have, strong weekly highs currently on the week time from this would then look like a wick that's been pushed in. And if this flips to the downside, weekly supports it, daily supports about potentially protect previous day's highs. So it could be a case where we maybe just want to go to break even on this trade. So let's say break even on this trade. Price can come up a little higher, we just go to break even. Go to break even on this trade. And then ask ourselves a question. If then we have a buy position open us at break even, could we hedge our risk? If in the case this ends up holding, could we get into sell positions? 30 pip stop loss covers this beautifully. What do we see here? Obviously this trade that trades at break even. Clear these drawings. Let me just show you once again. Weekly time frame, again, we have to be very careful. We can't swing any buy positions, we can't swing any sell positions too far just yet. But what we're doing is previous weeks, this week's currently we've come in, we rejected off something, rejected off this major high point. So major high, major low. We've then taken out previous day's highs, right? And we've seen a reaction out of that. And what we've seen price potentially protecting this supply point. So recording, so potentially holding the supply point. It's not clean whatsoever, but we are in a buy position. At the same time, we can now look to enter some sort of sell position. Stop loss above these highs or these highs. Either one is fine. Our session started right here, so it would have been an entry here or just wait for higher prices. So if let's just session opens here, 30 pip stop loss. Would I take this entry? No, because my stop loss isn't coming here. I don't want to be I don't want to be caught up in a case where price just takes me out and continues whilst respecting this. So I'd rather just give me a little bit of a buffer. For as long as my stop loss covers these sides, I'm happy. But because of candle is there, I can take this. So let's see what happens here. Market execution. And this trade looking to ride it all the way to the downside for a 1 to 5. So nice reaction. Let's see if that follows through. If it ends up taking us out, there's nothing we can do about it. So that buy position would have been still in that buy position that we closed out. At the same time, let's play price into the next day. Okay, what do we see here? Seeing the same thing. So we're seeing previous day's high getting taken out, the previous day's high getting taken out. If buyers are being rewarded, price came up once, try short in. If this price can come again and see a complex put and a continuation to the downside, if New York session starts above here, I wouldn't mind getting involved. But as of right now, New York session, we have conflicting data. We can go bearish, we can go bullish, we can sell out of here, we can buy out of here. I'm in two good positions, one buy, one sell, so I'm happy just leave this open. Let's see what happens. Wait for New York session. Just so that New York session gives us high prices. So New York session started right there. Like, okay, so what do we see? Large ATB range, fractal structure we can end up buying. where we're coming out, we keep reacting out of this supply. We react out once, twice. Buyers have been rewarded. Could we end up seeing a continuation down because we're more so focusing on the short side? Conflicting data could potentially stay out. So let's just stay out only because again, we have no idea what's gonna happen. Got the new forward candle that's open. The new forward candle has pushed to the upside, taking it previously. So we creating up previous candles. Potentially get high points of the session. 30 pip stop loss. Does it cover? Perfectly. So you can potentially get into something like this. Again, this is just based on us having conviction on one direction, only because overall we want to be bearish. So a strong reaction, and price tried buying, tried buying, tried buying, and we're not seeing that bullish intention. And if we get stopped out, we're in a buy position to hedge our risk anyways. So regardless, we're going to take home something from either side, right? Let's see what happens. Beautiful. That trade is probably going to take us out break even. Okay, so then what do you want to do? Idea would be now take out these lows and then to target into these lows here for a 1 to 1.5. So just clear all of these. Next day, let's play price into the next day. Damn. So London session's open. We can close out majority of our position because we're up 6% floating equity. We still have 1.5%, so we can move these to break even now. Move that to thingy and then move that down here. I think we can just leave these open because the idea is just to see price come collapsing down. Let's play continuations. Lens session is open. There's no trade day here. We've already smashed into major target points. Idea would be large ATV range. Pullback continuations. We play. Why do we play it here? Because it's outside of session. But even if this was London session, I'd rather than wait for a high price for New York session. I've already given explanation plenty of times. Let's see. What's the time? 12 to. Shit, New York session has started. New York session started right there. If we were to play this for New York session, we could have played something like that. 30 pip stop loss above them highs. Just say play simple continuations. Right. Look at the forward time frame. Oh yeah, on the forward, that's daily time frame. On the 4 hour time frame. On the forward time frame, this looks nice because we're seeing range, micro range take, and obviously we're looking at for price to break this micro range. If price takes this micro range out, okay, we might sell from here, which is fine. We're taking a previous forward candle, so we're just coming into further and further premium pricing. So this is a decent position. It's a good position actually. Nice reaction. Outside of session now, so nothing we can do. What days is this? Is Sunday, so potentially move to break. We've got a decent entry on this. Move that to break even. Move that to break even. If price tags us out, because it's a new week, right? If you look at this from the week perspective, what do we see? We see that price can print a new high of the week, whilst also protecting this high. So that means our trade might get taken out. This trade might get taken out. But just as price comes back into this weekly candle, and they've been expanded to the downside. So I'd rather keep that break even. Might most likely get offered better pricing for the day, for the week. Sorry. So let's keep this open. Play price into the next session, London session. London session is about to open. Here, just expect the price to run these lows. London session comes to an end. Expectation is look, push, massive pause, wasn't going to get involved. Price pulling back. A lot of people looking at this supply. What we do is look for the highs to get taken out, better entry, play continuations. But outside of sessions, we're not going to play anything just yet. Price goes up higher. Where does New York session start? New York session starts right here. Same idea though. Where's the weekly? Again, you see how I'm really focused on the weekly high and low being printed, like we mentioned. This could be a decent entry and the price ends up creating a small wick and then continuation. So that could be something I'd be willing to play. Again, playing the same theory. Wasn't playing this because it's type 2 on the 50-minute time frame. Price comes high, didn't play this, didn't play this. I'm gonna play this because this is within session. No, one more candle. This is within session. Stop loss, 30 pip stop loss. But for this case, price takes me out here. I'm happy to get taken out of this trade because my stop loss for this trade is up. What's the point getting stopped out of this trade and being in this trade? So I'd rather either my stop loss here. Again, this just being dynamic with everything, right? It makes sense for me to put my stop loss here. If I get taken out of this, taking out both trades, pricing provide better entries for the week, and then we can get involved at better pricing. No point getting stopped out of one position, then being in another position whilst the position, and it's the same region anyways. So let's see what happens. Really nice continuation, up 5%. So what you want to do, close out, take off another 2% from all of these positions. Not 2%, but take off, so we can close out 2%. And then this position, move that here. So what you start to realize is when it comes to management, I don't really scale in too much on like live trading and stuff. But what I tend to do is, what do you call it? Every time I'm up X amount and I can take off 2%, another 2%, another 2%, just shaving off in 2% increments. So we have this demand point. A lot of people can look at this demand point because we've seen a break of structure, further break of structure. Looking at this demand point, let's see if the demand point gets taken out. And it gets taken out just like we expected. Outside of session. Wait for London session. What do you see? Same thing here. Massive pause. Massive pause. Do we get involved? Involved? Oh no, because it's outside of session. Do we still get involved? No, because this is outside of session. We've got New York session starting here. So we've got New York session. We're at this supply. We're at this supply. We could take this trade with our stop loss at these highs. Both trades are protected. This is the only trade that we have risk on. Worth the risk. Take this. Let's see what happens. And again, why am I not waiting for New York session? Because I can get a stop loss at I can get a stop loss at what do you call it, at protected highs or significant high points. So if these internal highs are to hold, perfect, right? And again, it allows me to decrease my stop loss because I'm in all of these positions around the same region. If I get stopped at one position, I'd rather get stopped at all positions. Now, if I get stopped at one position, things being kept in one position, it doesn't make too much sense. So let's see what happens. I get stopped out. So I get stopped at all the positions, took up 1% stop loss, and I managed to take away something from these trades. Nevertheless, so move on to London session. Move on to New York session. Let's see what happens. New York session is about to start in 15 minutes. So what do we see? We've seen quite a strong reaction on the daily time frame. This could either flip and become such an aggressive move to the downside, or let's go to the weekly time frame. What do we see on the weekly time frame? Protecting previous weeks. Are we just maintaining and just gonna head up to the upside one more time, respecting this? Could be the case, right? In that case, I don't want to go against momentum just yet. Again, it's a high risk trade at a supply. We're reacting out of major low points. We've seen a strong daily candle. May want to back off of that just a little. Let's see what happens. Price proves to us. Move on to the next session. Let me just. Oh shit, past London session. But anyways, we have these highs resting right here. I did see that getting taken out, and then what can we do? Look for sales once again, just like we did here. Look for sales once again, like within context, with logic as well, right? But it makes sense why it doesn't take away the fact that we're still bullish. Why? Because that we're still bearish because we have that larger range, or we have this larger range if this was to get taken out, right? So we're still overall momentum on the high time from bearish. I'm also talking on the weekly perspective or weekly perspective or monthly perspective, which doesn't then mean that we can't take any buy positions. Look, I think majority of our trades have been buy positions. What day do we start? Just so I know. So we've got another 7 days left of the backtest. We had quite a long backtesting session, I think. Continue to pay price. Okay, we end up taking out these sides. We've got New York session starting very soon. New York session starts. So now we have to ask ourselves, do we want to go against momentum just yet? We can take this trade. We got equity to play with. Very high risk setup. And do you notice how a lot of these trades haven't been running too high? Our average take profits weren't too high, right? We've not been swinging these trades because again, there's not a lot of conviction in a lot of these moves. Take this trade, but at the same time we have micro range, micro range, micro range, micro range, micro range. This could also hold. This could hold as much as this could drop down from here. Conflicting data. You're up 50%. We're up 15%. Sorry. Could be a valid trade, right? Could be a possible trade idea. Let's see if we take this trade. 30 pip stop loss, more than enough buffer. The only reason I don't, the only reason I'm not liking this is because it's just seeing strong momentum. So I'm not gonna take this for now. So we have strong intention. Okay, good that we didn't take it. Where would our stop loss where would our stop loss have been? Let's see. Okay, we definitely would have been in this trade. Let's see if price was to work out. And it works out either way, so that's fine. Move on to the next day. At least now we've seen intention, right? Then the sessions come. One to New York session. Beautiful. So what do we see? Major highs coming above previous high points. Testing ourselves once again. Fractal structure, just like this, but this time price actually holds this and heads to the downside. So in the next 15 minutes, 30 minutes, sorry, if you see a pullback with the stop loss above here, test out the shorts. So let's see. So where's our 30 pip? 30 pip is up here. Unless price gives us a taps this limit order, and we've explained why we moved the entries up higher. Price doesn't offer us anything, so we move on to the next day. Fortunately, we're gonna miss out. We're missing out on a lot of this move. So what do you see here, right? Bullish A to B. This could easily hold fractal structure. Fractal structure. Prices coming into giving us a deep pullback. Sellers being rewarded short term, like I always say. Complex pullback back into this demand point. Could be a continuation. Why I'm not going to take this? What's difference? What's the difference between this setup, and this setup that we took? This one was within London session, but we had our stop loss beneath here. Our stop loss would have to be beneath this point. What's the difference between this setup? This one I avoided London session, but I took New York session because New York session doesn't have enough time for price to come crashing. Like it doesn't have enough time in the day for price to come down and then push up higher. With this, we have time to come down lower. So if I'm taking buy position, I'm gonna wait for New York session. But we are seeing strong initiation and strong pushes down, right? Something just to be aware of. But again, conflicting data. Stay out of this for now. Wait for New York session. Sacrifice to make his price may, if we were to take a trade like this, pause. Sacrifice the price may work out without us, trade without us. Nothing we can do about this. Let's wait for New York session. Very high prices. Momentum is pushing bullish, but we've come back into this supply point. So let's see what the next 15 minutes give us. 30 minutes, sorry. So we can take this. There's a 30 stop loss line up here. Somewhat, but what we can do is easily just put entry up higher. Again, I'm risking not getting involved because of a 10 pip. Because of 10 pips, I'm risking not getting involved, but I'd rather want that. I'd prefer a much better stop loss placement. So let's see limit order. Let's see if price comes taps in. Again, follow the same theory. There's nothing different about the trades I'm taking. And unfortunately, we don't get tapped in. Nothing we can do about it. So let's wait for the next day. So London session, we can do two things. Break structure, A to B. Beneath fractal structure, we take this. Would we take this? Because no, because we've got New York session that's in a few hours. I mean, stop loss beneath here. And we could also, I'd say, react out via continuation, conflicting data, more so leaning towards the sell side once again. So I'd rather wait for New York session. See if New York session gives us an entry. what does New York session do? Let's see. We got A to B fractal structure, just how we mentioned for New York session, potentially taking out these highs within a larger A to B. So the point is for London session, let's see what the fall was looking like. Protecting, could be then just push down, then continue. That's a possibility. So if price takes at this point, I'd happy to get into sell positions because what's happening? Because at that point, if you can either buy, stay, or sell out. Would you buy this market? Potentially. Got large ATB, got large ATB fractal structure, pullback, continuation, these size and then these size. In terms of sells, but at this current point in time, I wouldn't want to be buying. Selling could potentially sell. We at supply points above fractal structure. We also have external fractal structure here. Could price fulfill that objective and then continue down? If it does do that, potentially get involved. So let's see what the next 50-minute does. Push down lower. Again, it's conflicting data, but let's just see if then from here price can flip bullish. And I think we took a trade like that. Where did we take that trade? Here. Took a similar trade here, I think. So what we're gonna do is again potentially buy this. Stop loss. Is this the stop loss placement? Is it in valid place? We'd want it. Let's see whether there's a 50-minute candle. Flip that bullish. Stop loss. The stop loss beneath the previous 1 hour candle. Everything's been protected. I'm okay with taking an entry like that. Oh, we don't even get one. Do we get 1 to 2 to these highs? We don't even get 1 to 2, so it's either. So I can't really take an entry like this. I'd have to take a low entry, but I don't have conviction in that, so let's just stay out of that for now. Out of session, so let's see what happens. So this could work out, but look, save myself. So that's the thing, right? Entry would have been up here, stop loss covering down here. I'd prefer stop loss here, but I was okay with putting my stop loss beneath this low, but it doesn't give me enough range. So it's like putting everything together. It's putting everything together stops me from taking, stops me and avoids me from taking, but also allows me to take in certain situations as well. So outside of session, let's play price into the next day. Got London session soon. So what do we see? Let me just clear some of these. Actually, let me just clear this. So in the daily time frame, we're seeing previous days, all of the previous days holding. Obviously, you can see a strong initiation, push, pullback, continuation. Seeing evidence of these previous days holding. So if we can get an entry above, if we can get an entry stop loss above current day, I wouldn't mind taking an entry like this. 30 pip stop loss would be here, which means we can take an entry as low down as this, protecting previous days highs, because all of these previous days have been protected. Look to ride this to the downside, limit order on this. Let's see. Tag this in within our session. So let's see if this one has the legs to continue down all the way. We have to be careful with this, right? We're not in the best of the best entry. We're coming into the New York session, so we can't really go to break even because price can either just take this point out and then continue. So let's just see. Well, I wouldn't have good stop loss placement on that trade if I was to enter a New York session. And that concludes our backtesting session, and I just close out this trade for 100%. And I'm guessing price. Let's see EuroCAD, July 2023. Let's see where price ended. Let's see what happened. Let's see how this played out. July 2023. Where were we looking? What did we just say here? Price could respect this. Price ended up respecting that, and we ended up pushing to the upside. So that's the thing. Look, that's mad. Look, fractal break. Reasons to go long. We have this demand point. If that gets taken out, we're just looking at complex pullback deeper and deeper. Tested the buys, tested the buys. Buys ended up taking control of this market. We also know when we take out this point, we open up a bearish range. As much as we're trying to justify what price can take out these highs, we have to understand that look, price, what do you call it? Price can hold this and head to the downside. What happens? Price takes this point. Does that take away the fact that we're still bullish? No. It just gives us a deeper pullback, right? And then we end up seeing a price come lower, continuation, take out this point. Worst case scenario, price pushes down, highest high, lowest low. That doesn't happen. We just initiate, pull back, and then we just play continuous all the way up, and then we end up taking out these highs. After them highs, new intent can come into the market. But look how long after that happens. The narrative itself worked out beautifully, exactly how we said it was going to work out. Still recording, exactly how we said it was going to work out. Go to a monthly time frame. It's very choppy, but you can still make sense of it as much as you know. So yeah, so if you look at the analytics, let's go to analytics. So that was a very, very busy month. 70% win rate, which is wicked. Usually I'm averaging a 50% win rate. 18 trades, a lot more than my usual. I'm usually taking 10 trades, not even 10 trades. 5 losers, 12 winners, which is wicked. One break-even trade. Total winners 12, total losers 1, that's 5. Best win, 3%, average win 1. Worst loss, which is the only variable that would never change, would be 1%. That's really good. In terms of other analytics, nothing really. To look at. Max risk reward was 5%. Remember, there's a lot of trades that we were scaling out accordingly, right? There's no way you're gonna hold 10-20% worth of trades just open. You're gonna be scaling out accordingly. So a 20 or like a 15% scaling trade, all in all, is never gonna be 15% altogether. Yeah, so then I think that concludes the entire backtesting session. Thank you guys.